Good evening, everyone, and a warm welcome to Tuesday Meet. Tuesday Meets are audio meets only, and today's topic for this session is Real Estate Investment Trust. So, without further delay, let us warmly welcome Dr. Ram sir to carry forward this session. Over to you, sir.
Thank you very much for joining this meeting. Participant might have joined from the uh, different cities. Uh, can you write your name and city in the comment on the YouTube so that I can understand how many are joining for first time? So basically, the whoever is attending first time, please write your name and city in the comments. Okay. Today's discussion is about real estate investment trust, and there is another entity, infrastructure investment trust. The short form of this is REIT. And in anyway, so these are the short forms. Two are similar, slight difference we will discuss today. Tuesday Meet is from the passive investing point of view. We don't discuss advanced trading or technical analysis. Passive investing means you are buying ETF, mutual fund, or shares without advanced analysis and holding for long period. Fantastic way is to do systematic investment planning. That is buying same asset on same date, same amount. So systematic investment can be done in any asset, including the gold, REIT, shares, ETF, mutual fund. Logistics is little different. Otherwise, it is possible. Before we begin the session, let me put a disclaimer. This session is only for the educational purpose. Don't consider this as an investment advice. We also recommend to become a student rather than the judge. Students learns a lot. Judge learns nothing. So whatever is suitable to you, take it. Otherwise, discard it. I recommend you to write the notes, or you can take a snapshot to refer later on. There is no PowerPoint presentation because this is live meeting and it's live demonstration most of the time. I don't waste too much time on creating PPT and uh, having the structured discussion. I go with the audience questions and uh, live demonstration. So when we talk about assets, we have physical asset, and it is ideal to write the answers when I ask you to write in the comment section so that it will become a two-way meeting rather than just one-way, just lecturing. So can you write what are the assets, uh, physical assets? Okay. Then there are financial assets. So physical assets are real estate, gold, some machines. For example, if your CT MRI, that is a physical asset. Ambulance is the physical asset. Financial assets are debt product like FDs or debt mutual fund, and equity product, that means directly shares or uh, via mutual funds or ETF. When we recommend to buy diversify assets, it is easy to diversify debt asset and equity. Gold is also doable. Physical asset, you can buy gold coin. But the real challenge is in real estate. You cannot do the SIP in the real estate. So what is the alternative for real estate investment? So government and finance industry came with the solution, something called as uh, pooling money of multiple investor and invest into the properties. As a single investor, the real estate commercial property is a huge ticket size, 30, 40, 50 or lakhs or more than crores, etc. Real retailers or small investor cannot have it. So what is the solution then? We know that uh, when we go with the friends, we do the pooling of the money to uh, do something, some activities. Similarly, investing can be done by the pooling of money. So pooled investment vehicle. For example, ETF is exchange traded fund is a pooled investment vehicle. Mutual fund is a pooled investment vehicle. Those invest into equity and debt. Similarly, to buy real estate, this REITs and InvITs are the pooled investment vehicle. Now, vehicle means one financial instrument. How these REITs work, that we will discuss. And before that, you have to answer one question to yourself. Why do you want to understand the REIT or InvIT? The answer is it is a special class or a different class from the gold equity and gold equity debt. So for the diversification purpose, this REIT is an alternative to the real estate. Real estate. There are certain challenges in the REIT that we are going to discuss. Whether you want to invest or not, that is a secondary question. First question is whether you understand or not. That should be the first question. So today's focus is understand. So I'm not going to tell you whether you should invest or not, because once you understand, you will be able to make your own decision yourself. That is something we call as a self-reliant. We always insist to be self-reliant. That means do not be dependent on anyone. So analysis, understanding is important. So how this REIT work? REIT is started by someone, let's say sponsor. Sponsor is some company. Then that sponsor create a trust. Now trust, you know, that trust hospital, trust building, etc. Trust is a one uh, taxable entity. Sponsor is there, then they create a trust and they give name as the real estate investment trust. Then there is a uh, there are the investors who provide money to trust, and from that money, trust appoint one manager to look for the property and buy real estate. Which type of real estate? It's mostly commercial, because that is a rent yielding. So objective of REIT is to get the rent from the property. And then there will be a property manager who, if it is a commercial property, the property manager will be there. He will look after the money. And then there will be auditor, etc., etc., so many other entities. But this is how the anatomy or structure of the REIT. So now you may ask whether uh, the trust start after the taking money or before they already started. So most of the time, some company uh, they find internal investor, known friends, etc. They buy the property and then they list on the stock exchange, and the existing investor exit, sell their stake to new investor, and this is how it is listed on the stock exchange. Thereafter, this trust can raise fresh money from the fresh investor by issuing the units. Okay. Now these units are like shares only. Okay. Units are like shares, but the difference of this unit and mutual fund unit is that this unit cannot be fractional. Mutual fund units can be fractional number. Here it will be 1, 2, 3, 4, 5, 6, 7. And those units or shares are sold on the stock exchange during market hours. So then there is a pricing formula where demand supply come into picture, net asset value, and so on. This is the structure. What happens after it is listed? So for any shares or company, investor buy and sells shares, and then they come with some price, that is market price. Now it is based on the demand supply. So price of any goods, asset, service, first point you always have to say that it is decided by the demand supply and maybe some valuation models. So demand supply depend upon the sentiment. So these two factors are always there. Sometimes there may not be valuation model. For example, cryptocurrency, there is no value, intrinsic value. There is no valuation model at all. Ponzi schemes, there is no valuation. But for the financial assets, gold, equity, there are certain asset underlying that equity or that financial asset. So valuation can be done by various ways. In case of real REITs, it can be market value of real estate. So total market value of that uh, entire REIT divided by number of shares. That's thereafter the value of market value of valuation of that particular REITs can be arrived. But that is not the job of retailers. We cannot go and check market value of that real estate every day. So the fund manager declare market value not every day, but monthly, some quarterly. And then there are other fund manager, they try to extrapolate by using different financial models, the valuation models. But ultimately, the boss is demand and supply. Okay. So how many REITs are listed in India? Uh, this was a fantastic product according to me. And this has to be promoted extensively because Indians are very much keen to invest in real estate and gold. Uh, People are not that much comfortable with the equity, but real estate and gold definitely is popular. But unfortunately, these products are not popular because of few reasons that we'll discuss. Before that, where to find different type of REITs? So let's go to the market. This is NSE India website. Go to the market data. Click on the exchange traded funds. You get the REITs. Can you see here? REITs and InvITs. The difference between REITs and InvITs is that REITs invest into the commercial properties. InvITs invest only in the government projects, road, dam, airport, railway. And there is interesting phenomena in WIT that after 30 years or 50 years, the road has to be uh, uh, given or transferred to the government. So that is one basic difference. So let's check the REITs first, real estate properties. First is the symbol here. Now see the table first. Symbol, series. Now this prices, this is today's price, open, high, low, close. Then volume, how much volume, value, and rest of the thing. The important here columns are second column here. Click on the series. You get IV, that means INVIT. Clicks one more. So these are the REITs. You can take a snapshot as well of how many REITs are there. So you can count yourself now here from top to wherever there is RR is the symbol, that is REIT. So can you write down how many REITs are there in India at present? Now this can be increased. A few more can every year. Few more can come. 1, 2, 3, 4, 5, 6. You can imagine there are around 5,000 shares in India, 5,000 companies listed of shares, but REITs are only 5, 6. And out of which, if you, so second column important for you is the value. Okay. So first, Embassy is one REIT. The value traded is 64 crores. Second is Mindspace. The traded value in entire day is 14 crore. What does it show? It shows how much is the buying and trading happen. So it helps us to find out liquidity way, because in general we should avoid the stocks or asset where there is less liquidity, that means less trading. And here you can see that here it is just 6 crore trading, 6 crores, and this is 3 crore. So you can see such a big stock market where every day tens of thousands crores are being sold and bought, but here are only 3. That means these are less liquid. So my question to you, out of 1, 2, 3, 4, 5, 6, out of 6 REITs, I focus today as of now REITs, which have good liquidity. So whenever we invest, we have to have certain parameters for investing. You can write down cost, liquidity, operational efficiency, taxation, risk, and return. Plot risk return. There are only 2 REITs which are more liquid than the other. Okay, Embassy and Mindspace. Let's open one. First, we see the market, and then we will see go to the other parameters like liquidity. Operational is just buying and selling. Since you are buying on stock market, it is easy to buy and sell. Then we'll discuss taxation, then risk and return. So this is Embassy. Current price is 440. If you check the price in last 1 year, it probably increase up to 10%. Okay, you can have the chart of that on the NSE India as well. Okay, so this is the chart of the Embassy chart, but that is not the discussion point in this today. We'll discuss later on. Okay, then go down. So you find another parameter to understand liquidity is impact cost. And we say that if impact cost is more than 0.1, it is not liquid. So it is comparatively better. It we say it should be more than 0.01. Is it more than 0.01? Obviously. So it is liquid. Other two might not be that liquid. And then there are other things which may not be relevant today. Maybe what this one, to understand volatility, whether price is fluctuating too high or no. Okay. So apart from that, there is other information of uh, dividend distribution or income distribution. So now you can write one, you can understand one word here. Okay. Ex date and record date. Okay. So now let's go to uh, understand return. So if you bought at one share or one share of Embassy at 440, one share of 440. So what this REIT will do, they will give you some income that is in the form of interest. Okay. And they will give some money refund as well. So understand two words. One is distribution. Distribution means your own capital is given back. And this is interest. So here in the August month, they give 6.31 rupees per unit per share. In April, 6.5. Before that, they also give 6.47. Let's see how much interest they give. If you click more, this is detail. If you buy one unit at 440 or someone bought at 400 1 year ago, let's understand there is Dr. Amit who bought one unit at 400 1 year ago. 1 year ago, price was 400. So you take a pen and paper and start calculating return. Dr. Amit bought one unit of REIT at 400 rupees. Now this Embassy REIT company giving 636.31 as a distribution, 0.37 as a interest, and there is dividend as well. Okay, so investors are getting money, that is this will be deposited to your account. Okay, distribution on the form of so unit as a interest. So this is first is interest. Sorry, this is interest. Then dividend component and repayment. Can you do the addition of 0.37 plus 0.08 plus 5.16? So it means this Embassy has given 631 rupees back, but that is split into three parts now. Okay, let's write it down so that we will do the calculation. 37 as a interest, 0.37 as a interest, 0.8 as a dividend. This is rupees, okay, and 5.14 as a repayment, okay. And you see that similar amount 6.5 has gone on the April, February, slight here and there. We'll take the same number so that we can understand. Those who are curious can do the calculation in entire 1 year to find out exact return. Probably, okay. So let's say this one. How much they gave in the 2000 financial year 26. Okay, that can be the calculation can be done, or let's say how much they have given in the 25. Let's say this is calendar year. Okay, 25, 25, 4 times they given. So can you calculate how much is the 1, 2, 3, 4 in last year? These are the 4 values. 6.5. So I'm showing you calculation because if you don't understand the return, then what is the point of understanding theory? Theory is available on ChatGPT. Okay. And then fine. So you can do the calculation of this 4 number. This much amount they have refunded back. Okay. 6.5, 5.8. Can someone write in the chat box how much is the total of this 4 number, so that I can discuss later on. Probably if you are curious, you take the all values of uh, these 3 values, split into this, and find out how much uh, repayment is given, how much dividend, and how much interest. Okay. कितना है? 23.89. Okay, let's give. Someone has given a good answer. So what happens when you invest into the REIT? You start getting money in your bank. Okay. Who gives it? That embassy trust gives you. And, they directly transfer to your bank account, and that money will be, it is called as distribution of money. Distribution, let's say. It comes under 3 heading. First is interest. Second heading is dividend. Why this is important? Because income tax department made things a lot of complicated for this. That is why I say this is good product, good concept made bad by education. And third is repayment of capital. Okay, so let's find out how much was this. So in the previous example, it was 0.37 rupees. Dividend 0.8, and this is 5.14. Okay. So this is in August, but I told you to calculate in last year how much happened in the 1 year. So someone wrote the answer is in 2025, they give 23.89. And if 400 was the investment, how much is the return? If this amount you got, let's imagine this as a return for the simplicity, although this is not actual return because they are refunding your own money, but for time being considered as a return. How much will be the return then? Percentage wise, you just take this amount divided by how much was the buying price, multiplied by 100. So this is 5.9, means 6% return. It is like FD return. Okay. This is percentage. So it's like FD return you are getting. That means Dr. Amit invested in a REIT 400 rupees, and his wife Arpita invested 400 rupees in FD. Maybe he is getting 6%, and his wife is getting also 6% in FD. So return wise, do you think any major advantage here? REIT versus FD. If this is a REIT, FD is also around 6% now as of now. So return wise, as such, not much significance different as compared to FD. Okay. So this is a return. Now the interesting part of return is this money is actually your own money you paid. That's why it is called as repayment of capital. More interestingly, the taxation of all this component is again complicated. This is the reason suppose this was the total amount, or let's say make the sum of all these. Okay, so if this is a REIT, okay, FD. So in a REIT or REITs, the interest component is taxed as a slab rate. Dividend component is also considered as a slab rate. Whatever the slab individual has, that will be considered as a rate. The interesting is here. This is your capital. Here two points come into picture. Capital receipt. See, if Amit paid 400 rupees at the beginning, and if REIT repays his own money back, how it can be taxed? So that cannot be taxed, because if your own money cannot be taxed. So this is a tax free. However, if Amit uh, hold this REIT for several years, and slowly he recover entire 400 rupees. So up to 400 rupees is tax free. Up to 400 means up to buying price of original price is tax free. If REITs is giving additional money after the 400 cross, let's say cumulative number become 450. Okay, buying price was 400. So then remaining next 50, additional 50 will be taxed. Okay, taxed as again slab rate. Now this is so much confusion. That is the reason CS get a little frustrated of calculating how much should be the tax free, how much is the taxable. But if you are understanding, then that should not be a big problem. So what is a for practical purpose, if you buy the REITs, interest component, dividend component, you can put into the same category for tax rate. And most of the time, your capital receipt, you can see if they are giving 5 rupees or 20 rupees per year, it will take 10, 15, 20 years to recover entire amount. So practical purpose, this capital receipt is tax free. Okay. I'm talking about practical purpose. But if your repayment of capital goes beyond your buying price, then it will be start taxed. Suppose if you sell this REIT, if you Amit bought at 400 last year, and now current price is 440, and if you sell it, so his gain is 40 rupees. Why? Buying price was 400, he sold at 440. This will be applicable as a capital gain. And then capital gain tax, if it is less than 1 year, tax rate is 20%. If it is more than 1 year, it is taxed as a 12.5%. So he'll pay for, if it is more than 1 year, tax as per capital gain here, 12.5%. So the taxation of REIT has 4 different components. One is interest rate, interest rate, interest, then dividend, Then capital receipt. I talk about capital receipt. And then capital gain after sale. If you don't sell, you will not have capital gain. Capital gain will happen only after the sale. So here there are special rate of 12.5% and 20%. And these are slab rate. This will be free or slab rate. So this is the taxation. So I explained you the return. It is usually 6 to 8%. Taxation I explained. So if you get 6% and if you are in 30% tax bracket, your rate is, how much you are getting is in hand is hardly 0.7, 4.2%. And if inflation is 7%, you are actually losing money. But that is the scenario in FD as well. Post-tax return is not that much good. Then why should one invest in this? So this is an alternative to FD, where senior citizen or the person who are in low tax bracket can invest for regular income. Every 3 months, they are giving some income, and that is alternative to FD. So taxation is also similar to FD. However, there is possibility of capital gain, which is not available in FD. For example, here I shown you the last year price of Embassy was 390 or 400. Now it is 440. So 10% increase in the capital. Suppose this is buying price, and if you sell at 440, so 10% rise in the capital gain as well. So there are two possibilities now. One is coming in the form of regular income, and other is coming from the capital gain. So it is like alternative to the dividend paying stocks. So alternative to dividend. So this will be the better description than the alternative to the FD. So I'll put this as a first description of REIT or InvIT. It is alternative to the dividend paying stock. Second, it is alternative to the real estate as well, commercial property. Because even in real estate, if you buy the real estate, your rental yield is hardly 4 or 5%. So this is alternative to the real estate because it is itself is represented by real estate. It means instead of buying a commercial property shop or gala of 1 crore, someone can invest into the REIT. He'll get the same amount of return like rental yield every year, as well as chances of capital gain. Now, even in real estate, the capital gain is not fixed. You get or you may not get. Similarly, the capital gain is not uh, assured. That is a risk. Same is this. So this is alternative to the real estate. Okay. What is the risk? Risk is if you are investing for short term and then price goes down. Suppose someone, let's say now Dr. Suryakant invested in on 11th February, buying price 461 and current price is at 440. So what will happen if his price is now 5% down? So this is his entry price. As of now, it is down by 4. कितना percent हो गया इसका? 10%, 5%. What about after the entry from it went up to 10%? So FD does not go down. That means if you invest into 100 rupees, it will never become 99, 96. It will be go up and up. But here is the risk. It can go down. And you can see here, it has reduced by 10% here. But if you hold it for longer period, probably you will make the capital gain here. Okay. Now, since February, the buying price has not appeared. It is still below. That means there is no possibility of capital gain here. If he exit, there will be capital loss. Okay, so capital loss is possible. This is the risk of capital loss. But longer, you can see at least last 3-4 years since stock market is down, this REIT market, people are getting attracted and it has given a good amount of return. But if you see on longer period, if someone invested in 2020, you can see price is still not reached to that level. Let's say on this, even it has went up to 500. That means if someone has bought in the March before COVID, it went up to 500 and still price is not reached to that level. So it does not mean that you will have always capital appreciation. So even here, you can see if someone invested in 2022 at 380, still there is not significant appreciation. This is the risk. Volatility is risk. However, you are getting the rental income, let's say 6% every year, that's there. So if you are not selling REIT and you want to plan for retirement and then hand over property to the children, this is alternative to the real estate. This is alternative to real estate. This is not ideal candidate for the wealth creation or short-term money parking. This is like buy and die. Probably buy and die. The real estate is usually buy and die. There are very few people, they sell real estate. They just hand over to children, maximum people. So this is buy and die strategy where you get the income. So instead of land, which does not give any income, this can give a rental income 6%. So another part is that the part which is capital repayment is the tax-free. Okay, so you can see here, this is up to tax-free. That means out of 6.31, this is a tax-free, and only the part which is interest plus dividend is taxed. So it means this can be tax efficient than the FD. Initially, I shown you just rough taxation, but in reality, this become your tax-free. So you get the tax-free income. Suppose if you are getting tax-free income of 6% or 5%, let's say tax-free income. So it is definitely better than the FD. Okay, so there is one more interesting phenomenon as well. Okay, now this dividend is also tax-free in certain rates if they choose the special tax regime, etc. I will not go into that complicated, because the dividend part is as such not too much. But you just have to understand that these are 4 components. Okay, so even there is some probably recent government have made this as a free. Okay, so this can be a free. this can be free, and this will be taxed. This will be taxed. If your income is, if your gain is less than 1.25 lakhs, so even this long-term capital can be long-term capital gain can be tax-free up to 1.25. So these are the few things, nuances of taxation which come into picture. You need to understand little big picture. But for the people who are retiree, taxation is not a big problem because anyway they have income less than 12 lakhs, which is actually tax-free. Okay. So this is the risk. Risk is losing of capital. Volatility, when price goes down, suppose you can say that if someone has bought uh, in the COVID time and price went up to 36% down from this to here. So it is nothing, it is like stock market only. If any asset reduce the price by 30%, 40%, so it means it is the volatile. This we call as a drawdown. So this is the risk. Okay. So I discussed liquidity. I discussed uh, taxation. I discussed return. I discussed risk, return, and finally risk. All parameter I discussed. You may ask, what's up, ठीक है? And you are waiting for final judgment. कि भाई वो सब कुछ ठीक है लेकिन करना है क्या है? करना क्या है? Whether to buy or not. So these are very complicated answers because each individual is a different, or we say investor plus instrument. Instrument means financial instrument. I call this as an investment, not given in the book. I made it. Invest plus ment is equal to investment. That means instrument, let's say in this case is a REIT. So if you ask me whether to buy or not, I say wrong question because investor component has to be there. What are the investor component or what are the conditions where person can consider as a investing in the REITs? So what are the investor condition? Or investor conditions means is age, aspiration, time of horizon, time to hold this REITs, taxation, and all the things. So if you want to have the alternative to the dividend paying stock, if you want to have the alternative to the real estate, alternative to FD, this is one thing you can invest. Not for capital appreciation. For regular income, yes. Slightly tax efficient. Anyway, you are whatever you're getting tax free debt, it is actually your own money. So it is not as such tax free. But since this is a buy and die philosophy, so it will be tax free some or other day. Okay. Who should invest? These are the conditions. The person who understand the taxation which I discussed now, and the person who understand the difference between capital receipt and capital gain. Capital receipt is your own money is refunded. For example, you give deposit to for the rental property to landlord, and he refunded again. So that is not your income. It is your own money which is coming back. For example, if you buy gold at 1 lakh rupee and you sell at 1.6 lakhs rupees, tax will not be applicable on entire 1.6. It will be applicable only on the 60,000 because in this 1.6, your own money was 1 lakh. That is capital receipt. So this 1.6 will be divided into one is capital receipt. That is 1 lakh, which is your own money. So it cannot be taxed. And then capital gain which is above your capital receipt, that will be taxed. So the person who understand the difference between capital receipt and capital gain can invest into the REIT. If someone does not understand, then it's not recommended. If someone understand the taxation, it is good. If someone is in lower tax bracket, for example, senior citizen, they want income. So as a matter of diversification, one can go for this instrument. So what are the other instrument for regular income is FD, government bonds, debt funds, arbitrage funds, REITs, और क्या है, और क्या दे सकते हैं? रेगुलर मंथली इनकम हो सकता है, मंथली क्वार्टरली. Your real estate, if it is giving a rent, it is also, and dividend paying stock. So these are all instrument for the regular income. If you want to diversify in a different. So this is one asset to diversify. Okay. Even SGB is also giving some small amount of interest, sovereign gold bond. Okay. So these are the income asset. Then there are government schemes like PPF, Sukanya Samriddhi Yojana, Kisan Vikas Patra, or kya, some insurance plans and so on. There are many, but REITs fit into this category. Okay. Let's ask some questions now. Okay. Do we have to buy, do we have to check the charts? It is good to see the charts if you have the knowledge, but since this discussion is not for the trading or a chart, we will not go. If you have the some knowledge of chart, it will definitely add little more edge. Uh, Question is, why capital receipt are taxed at slab rate? No, capital receipt is slabbed capital receipt above your buying price. Is taxable. But since you are not selling it, so it cannot be considered as a capital gain. But still it will be taxed and it will be considered as a other income. So there are 5 headings. So everything comes into other income is taxed as a slab rate. So all money received from the REITs go to the other category. If you don't sell the REITs, all income money coming from the REITs will go under the other income head category. Okay. Let's go for this is the website of embassy. I recommend you to go and check here. They have a little more data. Where is that data? Embassy. Details information where they are investing, everything they will be mentioned. If you want to check the exact amount they paid, you have the data of that amount as well. Okay. Distribution history. So here is another data from the embassy on their website, how much they have given into three components. So you can take the snapshot of this, or you can visit website later on, find out their how much return they are giving. So here are the dates as well. 15th to 2025, 26. Okay. See how much they give into 25 before 24. So interest component, repayment, and dividend. Now, one more important here is the record date. That means you have to buy shares 1 day before the record date. Okay. In fact, previously there was a record date and X date was different. So you may come across one more word. I'll explain that. It is I used to call this AERB. AERB वो हमारा एटॉमिक एनर्जी रेगुलेटरी बॉडीज है वैसे date of announcement, then X distribution date, and then record date, and then B is bank transfer. So if you want to get the distribution, you have to buy 1 day before the X date. X distribution. Nowadays, X and record has become one. Previously, it was record date was the next day of X date. So you can remember that you have to buy 1 day before this. For example, here, announced date was July. So record date was 4. You can buy the REIT on 3rd and you will get the interest on the 4th. Maybe bank transfer happen after a few days, but this is the sequence AERB, X date, record date, bank transfer. Okay. How capital loss will be considered? Capital loss you can set up against capital gain of any other capital gain. Okay. So the valuation is a little complicated topic. So valuation is mainly the value of asset. Okay, that is one way. Other they can calculate based on the intrinsic value calculation based on the discounted cash flow and all the things, but that is not much relevant because eventually it is the market who decide the what decide the price. Okay. Next question is any mutual fund for REITs? I don't think you should waste your time in mutual fund for REITs because there are only two REITs. What is the point of going again one more entity which invest into the REITs? There might be mutual funds in REIT. I never invested it, and it is not required as well because there are only two REITs which are liquid. So what is there to select? ज़्यादा option है ही नहीं है. How much is the expected appreciation in REITs? Will it be comparable to appreciation in physical real estate? I don't know. Future कल किसने देखा? I do not know. But usually real estate return is also into 8 to 12%. जैसे equity होता है. Let's say 10 to 12 ऐसा बोल देते हैं 10 to 12%, which includes that interest dividend. That means if 6% is the interest dividend, 6% may be the capital gain. In even real estate, people talk about that huge return, but those days are gone. Abhi high return is possible only if you buy land and there is airport or some government project, then only you get astronomical return. Otherwise, if you as a normal retailers, you don't expect too much return in the commercial. Maybe land is a different picture. We are not discussing land, but real estate, your return is between 10 and 12%. That's it. Another question can I speak? Can it be shown as a bot against selling the actual receipt to avoid taxation? No, that is, uh, if you sell the real estate and you buy the REIT, that real estate is a separate transaction. It cannot you cannot save the tax by buying the REITs. Okay, so even if you sell one house or sell one plot and buy another plot, you cannot save tax just by selling one plot and buying another. So there is no question of selling real estate and buying REIT. What about percentage of return? Again, there is no investor depend, but maybe 5 to 10%. I'm not saying invest. I'm saying if someone wants to diversify, this is one instrument, 1 to 2%, 5% that can be invested. So there are so many things. Okay. FD है, bond है, debt fund है, arbitrage है, REITs है. Next is, sir, can it be 40% R in the grade asset allocation alternative to physical real estate? That, see, the question is, we talk about grade. Okay. So REIT can be a proxy. REIT can be proxy to real estate because it is not completely linked to the market, stock market. Sometime market goes down and REITs go up. So there is no perfect correlation. But in a bad time, be aware, in a bad time, सब कुछ नीचे जाता है. So like in COVID or economic crisis, कोई भी asset ऊपर नहीं, सब कुछ नीचे जाता है. तो there is no, except cash. Cash is the king. So you can see in the COVID, सब कुछ नीचे गया. So in case of crisis, only cash is the king. Even gold goes down, gold, dollar, everything goes down except cash. All right. So we'll stop here. Thank you very much. You can post your notes in the basic finance group. Thank you very much. Those who are not a Wealthcon member, they can join. Admin, please post a WhatsApp link to the comments so that they can join. Thank you.
Thank you so much, sir, for this wonderful session. And thank you all the participants for joining. See you all in next Tuesday meet. Thank you.